Hello and welcome to the Cash Flow Forecast brought to you by the Community Foundation for Greater Atlanta and the Nonprofit Loan Fund. My name is Kathy Spornick. I am the administrator of the Nonprofit Loan Fund. We are offering this mini session to those of you who have never prepared a cash flow forecast or perhaps are looking at putting together a loan package for the Nonprofit Loan Fund or your bank, or you just want to know what are some of the first steps that I need to do in order to start using a cash flow forecast for my organization. Good cash flow management includes a lot of different things, but it is a little bit more than just looking at your checkbook balance every day. A cash flow forecast is going to help give you a future view to your cash gaps and give you an opportunity before the crisis happens to take a look at what are some possible solutions. I've listed 6 steps here just to give you some structure on how do you begin to complete a cash flow forecast. These are by no means exclusive steps, nor are they the only ones that could possibly be used. You may have your own already in mind. But for those of you that have never completed one and you're looking for some structure, this hopefully will give you a view into how to begin and how to complete your first one. I would recommend that you download the template that is on our website at www.cfgreateratlanta.org at the Nonprofit Loan Fund page. The cash flow template is an Excel format. It has already been completed for you with formulas in many of the cells, but I just want to go over briefly what the template is and how you can use it. You can see at the top that there is a place for you to put the name of your organization and a date. This is important if you're going to be printing this off and handing it to someone, or even if you're saving versions of this so that you can remember when it was you completed this. You can see that your fiscal year end is going to be placed in a cell in number 2. That really helps people understand when they're looking at a cash flow forecast where you are in your budget year. It's important where it says month and year to actually put the month and the year so that you have August of 2013, September of 2013, so that people can really see not only where you are in your budget year, but where you are with the forecast. Then you'll see sections called cash sources and cash disbursements. We're going to go through this later in this session, but it's important to remember that this is more than your income statement. Your cash sources are every area of finance within your organization that is going to bring money into your organization that can be used for operating expenses. We're going to talk about some of the things that should go in cash sources, but please remember that if you do not have access to the cash for use for your operating expenses, you should not put it in here. So that would include restricted grants or restricted funds that you do not have access to. Cash disbursements, exactly the same thing. You're talking about what are you stroking a check for? What types of cash are going to be going out of your account on a monthly basis? All of the grayed areas have formulas in them. I want to point out 2 things. The gray areas under cash sources and cash disbursements are simply samples. You can type right over that to make it match your financials and your budget. And if you look at beginning cash balance in number 4, that is blank. You will have to complete that one number, but all of the remaining numbers are already tabulated for you. Because remember, the beginning cash balance of month 2 is simply the ending cash balance of month 1. At the bottom of your form, you're going to see that there are already formulas in there that will tell you what your cash surplus or deficit is by month and what your ending cash balance is. So when you look at steps to completing your forecast, the very first thing that you really have to have in front of you is your annual budget. You want to take your annual budget, which I know will look very different for all of you. This is just an example. You want to take this annual budget and you want to break it into a 12-month view. When you put it into a 12-month view, please remember that you're going to use this as a basis for tracking the inflows and outflows of your cash. So give this a little bit of thought. It will really help you with your cash flow forecast. I would highly recommend that you don't straight line your numbers. What does that mean? that you take your annual budget number on any given line and divide it by 12. More than likely, your cash is not going to come into your organization in nice, even numbers every single month. If you're doing that for budgeting purposes, that's fine if that's what you like to do. But for cash flow, give it a little more thought. Once you have your annual budget broken into a 12-month view, you're going to want to identify non-cash revenues and non-cash expenses. What are some examples of these? Well, many organizations, for instance, have annual galas or annual fundraising events. And most nonprofit organizations will seek out in-kind donations. Perhaps you'll have a space that is donated to you for use for your gala. When it is an in-kind donation or an in-kind expense, well, these need to be identified by category because you need to deduct them. They're not cash items. The money doesn't come into your account, nor does it go out. Once you've identified all of these, you want to deduct that from the number that you're going to use for your cash flow forecast. Now you're going to want to account for non-budgeted cash sources and cash uses. Now, you think, well, what in the world would I have coming in that might not be in my budget? Here are just a few simple questions you could ask yourself. Are you going to sell any assets or borrow any money? If you have a reserve account, will you be able to transfer money in and out of that reserve account? Or are you planning a major purchase? See, these items are not going to show up necessarily on your income statement. So for example, what if you have an old printer and you're going to buy a new one? Well, if you're going to buy a new printer and sell the old one, you may have access to the money that comes in from selling the old printer. That's cash that's going to be deposited into your checkbook, and it's going to hit your cash flow forecast. But you're not in the business of selling printers, so it's not income, and it's not going to be in your profit and loss statement. The bottom line is, does it affect my checkbook, and is it in the budget? Now you're going to edit the categories on the form, the Excel form that we talked about earlier, to match your budget. It will make things much easier for you if you do that. So for instance, if we go to your budget and we take a look at what we don't want to do, which is the straight line budget, if you start thinking through the numbers, you can actually type over, as I'm going to show you here, just type over what exactly it is you would like for the area on the left to say to match your budget, and then you're going to put numbers in here, and you can see that all of the numbers are automatically changing for you in the formulas on the Excel spreadsheet. Once you have all of the categories edited to match your budget so that it's easier for you to take care of entering the numbers, you're going to go into the cash flow worksheet and you're going to begin thinking through when those numbers are going to come in. There are some different ways that you can take a look at revenue numbers. Let's just say, how am I going to know when individual donations are going to come in? You probably have a sense of the months that the majority of your donations come in. So maybe you take your budget number and you say, okay, I'm going to budget 80% of that number to go into my individual contributions, and they typically come in months 4, 5, and 6. You would take 80% then and you would budget that number into the Excel spreadsheet. I do think that it is a good idea when you are working on your budget to create what is called a check column. The check column is your budgeted number for each individual line. Now remember, your budget may have in-kind donations and in-kind expenses. However, so your cash flow number on each individual line may not be exactly the same as your budgeted number, but it should be darn close. So as you enter your numbers for donations, for grants and contracts, you can see in this column, as the numbers begin to total up, they should look similar to this column, which is your budgeted number. It's just a check column to help you remember to look at numbers to say, okay, this makes sense. I think I have everything in here. After you have edited the categories and you begin to enter the monthly amounts and those start to look like they have aligned with your budget, as I said, start with some numbers that you actually know, that you feel very comfortable with, that have a high percentage of comfort level in what your projection is. You have an approved budget, and so now you're thinking through these numbers and you're entering them. You know more about the numbers of your budget and your cash flow than anybody else. And as you begin to enter them, just remember that you're the expert, and this is for you. I want to point out one thing. When you enter your cash flow forecast, don't panic if you see on the ending cash line that perhaps the number is way too small, or even if it's negative. Go back first and double check your numbers and make sure that your cash flow number and your budget number, that is your check column, look like they make sense. If your cash flow number for foundations and restricted amounts or individual donations is, for instance, the total comes up to $300,000 in this case, and you have a budgeted number of $425,000, well, perhaps you've missed something, and you just want to go back and double check. The same with your expenses. But remember, this is a forecast, and you're doing this with your budget. So if you actually have a negative number, that's the whole purpose of a cash flow forecast. It gives you some time to think through the options, to present this number to your board of directors, and to be able to think of the solutions long before the crisis takes place. So check your totals against your budget, make sure they're aligned and they make sense. Make sure if there is a negative number also that you have entered that first beginning cash balance. Now some people have said, well, how will I know what my beginning cash balance is going to be? Well, you probably have a sense of what your cash balance is on average. You can even look at the last 6 months and take an average amount, or you could go back to last year's general ledger cash balance for that month that you're starting and just take a good solid guess at what it is. Each month, if you find that your cash flow forecast is changing drastically from what you forecasted, then you can update the numbers. You may have had an unexpected expense that was not in the budget. You may have had an unexpected donation. Those are always good reasons to have to redo your cash flow forecast. Update this monthly and use it internally to help you have some comfort level with what your operating expenses, how your operating expenses are going to be covered. So those are the 6 steps that I've come up with for completing a cash flow forecast. As I said, you may have your own. You may have books available to you that give you different views. But for those of you who have never completed one, try this first, and then you will develop your own way of doing your cash flow forecast for your organization. We thank you for your time today. Hope this has been helpful. There are workshops available for the Nonprofit Loan Fund on a regular basis, and we do cover the cash flow forecast as part of that workshop. You can find out more about the Nonprofit Loan Fund at our website, www.cfgreateratlanta.org, and go to the Nonprofit Loan Fund page. Thank you again for your attention.